Hey, Jonathan. Yeah, Lisa Cook speaking here at the AEA annual conference in New Orleans. She says inflation remains far too high, but she sees some encouraging signs on the inflation front. And some of that comes from her. She did a deep dive on supply chains. And she says there are indicators just input shortages have eased, transportation costs have fallen, supply constraints, she says, are rents increases also, she says, have slowed substantially. Core services inflation, though, she says, remains stubbornly high, and the pandemic has affected labor supply much longer than she expected. There is some concern on her part about inflation expectations. She is committed to bringing inflation back down to 2%. And the increase in inflation expectations, she says, could indeed run into inflation and drive it higher. Guys, just before I go, I do want to have you take a look at what's happened to the 2-year today. It has been a massive decline in yield and a big rally there, almost 25 basis points if you have that chart. I mean, it's really quite remarkable. The yield has gone up in two different, the yields have gone down, sorry, in two different moves here. On the one hand, it was the jobs number helped out there. When you zoom in, you can see those two shelves there. And then that ISM supply services number came out weaker than expected, and it fell again. If you had a cam on Santelli now, he'd be doing double flips and cartwheels right now. This is a big move in the 2-year and somewhat of a reset in expectations for the Fed as the peak rate has now come down from above 5 to now in the 4.90 range, so about 10 basis points or so coming off of that. And I think if you want to know what's with the rally today, I think it's a big part of it.